Hey guys, um, today we are going to look at Rowe Price Group. It's been a long, exhausting day. I'm a little low energy now, so forgive me if I'm not coming across as clear. But we're going to look at Rowe Price Group. There are a lot of stocks that are fundamentally sound stocks that have been falling as of late. And that can be a situation where people take losses. It can also be a situation where you take advantage of opportunities. So we want to take advantage of the opportunities. So now we're going to look at Rowe Price Group. And we'll start by looking at the technicals, the candlestick chart. I have the settings set to where each candle represents a year. And notice, Rowe Price Group has been moving up for years until here, 2020, or I should say 2022, it moves down significantly. And here we are in 2023, and it's still moving down. So that's if we look at this from a yearly perspective. Now, let's switch to a weekly view and look at what's happening as far as the weeks. We see it moved up, down and up a little, and then it started this steep decline. When was that? That was around November of 2021. Started this steep decline, came up a little, back down, up a little, back down, and then it started moving sideways from around, I guess that's October of 22, and starting in, what is this? I believe this is August of this year. It started going down a little more. So, where are we at currently? Currently, it's at $95.47 a share. That's where the stock is. Now, let's go over and take a look at the underlying company. Okay, so we're looking at T. Rowe Price Group in this video. Ticker symbol is TROW. Now, if we look at T. Rowe Price, we'll notice that if we look at the earnings per share, that's the profit that the company made divided by the number of outstanding shares. In 2018, it was 7.27. 2019, it was 8.70. 2020, it was 9.98. 2021, it was 13.12. But in 2022, it dropped all the way to 6.70. It actually dropped below what it was in 2018. So our question is, will this stock be recovering? Will it be moving back up? if we look at the prices it came from, 71 to 104, 75 to 108, 74 to 136. The low price is only moving up a little each year. Till we get to 2021, it jumps up to 132 to 205. But then last year, 93 to 181. And here we are in 2023. It's at the low price again, and this time it's 95.47. And like we said, our earnings per share is 6.71, and our current PE is 14.23. That's higher than the low PE has been in the previous 5 years. In 2022, it went to 14.01 and then came back up. Now it's at 14.23. The question is this where it's going to stop and then move back up? Or is it going to stop, go even lower? Now, we can't necessarily tell what the low price of a stock is going to be from year to year. But what we can do is we can look at the PE ratio and get a better idea. This PE ratio over the last 5 years, you know what, 2020, yeah, I'll include 2020, even though it was COVID year. 2020, the low PE ratio was 7.50. Let's say that this stock was to move back to that low PE ratio, 7.50, times the earnings per share, 6.71, and that gives us 50.32. So if the PE were to keep dropping and go all the way down to 7.50, this stock could potentially go down to 50.32. But even though the PE is higher than it's been in the last 5 years, it's only slightly higher than 2022. Is it possible that it can move back up? It's possible. What we want to do is watch it. And as we're looking at our weekly candlestick chart, when we see that it started to move up for a couple of weeks, that may be our opportunity to jump in. Now, let's look at what this stock could possibly move up to. If I look at the low and the high PE for 2018, there's a difference of 5. 2019, there's a difference of 4. 2020, there's a difference of 6. 21, a difference of 5. And 22, it's actually 13. But let's say 5. So our current PE is 14.23. I'm going to add 5 to that. So that's 19.23 times the earnings per share, 6.71. equals 129.03. So this stock is currently at a price of 95.47, and based on PE calculations, it can go up to $129.03 within the next 12 months. But that's purely based on PE calculations. There's actually another simpler way of determining where the price can go to. And here we're at Yahoo Finance. You can put in the ticker symbol for this stock, TROW, and it shows you the current stock price. The market is closed now, and the current price is $95.47. It also shows you what's going on in after hours. This stock is actually up $1.43 in after hours. So if it stays up, it can open up in the morning at around $96.90. But I'm going to scroll down. And if I scroll down, here it has 1 year target estimate. And Yahoo's analysts give their prediction of where they feel the stock's going to go over the next 12 months. They feel it will go up from 95.47 to 99.64. I'm not sure what involved in their analysis, what brings them to that conclusion, but that's Yahoo analyst conclusion. So now that we've looked at price, where the prices could possibly go for T. Rowe Price, let's do a deeper look and look at the company, the fundamentals for the company. And the first thing we see is T. Rowe Price's sales or overall sales or their revenue for the last 5 years. 5.3 billion in 2018. It went up to 5.6 billion in 2019, 6.2 billion in 2020, 7.6 billion in 2021, and then it dropped to 6.4 billion in 2022. It dropped below 2021's earnings or 2021 sales, but not below 2020's. So we see how much money we made overall, or they made overall in terms of sales. What about their net income? In other words, when they paid all of their expenses those years, how much money was left over in terms of profit? In 2018, 1.8 billion, 2019, 2 billion, 2020, 2.3 billion, 2021, 3 billion, and in 2022, it dropped down to 1.5 billion. So now we have two factors, two things going on. First, if we look at 2021 and then 2022, we see a big drop off in terms of their overall sales. or revenue. The second thing is we see a drop off in terms of their net income or their profit. And that drop off is for two reasons. One, because they made less money overall in terms of their sales, but also because they made less of a profit margin. If you look here at margin, notice different companies and different industries. They different companies and different industries um keep a different profit margin. Some companies, they may only keep 5% of their overall revenue in terms of profit. Some companies may keep 15%, 20%. This company keeps, they kept 34% in 2018, 36% in 2019, 37% in 2020, 39% in 2021. So not only were they making more money each year, they were figuring out how to eke out more profit each year. But what about 2022? 23%. Now, 23% is quite decent for a profit margin with many companies, but with this company, that 23% doesn't line up with the large profit margins that they were pulling in the years preceding. Now let's take a look at return on equity. That's the return on the shareholders' ownership. And return on equity is 30% in 2018, 29% in 2019, 29% in 2019, 32% in 2021. Very good numbers for return on equity, but 16.85 in 2022. Not horrible numbers for return on equity. The only problem is it doesn't compare to the previous years. And we have to find out why they dropped off so significantly in 2022. And if we remember the candlestick chart, it seems that that issue may not have been resolved just yet. Before we go down to the balance sheet, let's look at the debt to equity. 25%, 31%, 38%, 34%, and 28%. So I would say they're doing a very good job of keeping their debt down. And if we look at this balance sheet, we see current assets exceed current liabilities or debts significantly, and total assets exceed total liabilities significantly, which means that this company is positioned to be around for quite a while, and their debts are very well handled. I would call this an excellent balance sheet. Let's go down and look at we see this company pays a dividend each year, 694,733,000,000. $845,000,000, $1,701,000,000, $1,107,000,000. So they're sharing their profits with their shareholders, and they're buying back shares of their own stock. They did that for the last 5 years, which is a great thing and often results in the stock price moving up after that happens. Now, this last part, cash flow from operating activities, and we're going to subtract purchases that the company had to make. That will show us our free cash flow. Why is the free cash flow significant? Up above in the income statement, I showed you the net income. That's the revenue minus the expenses gives us net income or profit, right? And we had 1.8 billion in 2018, 2 billion in 2019, 2.3 billion in 2020, 3 billion in 2021, and 1.5 billion in 2022. Well, net income sometimes can be manipulated in accounting, meaning there's accounting things that can be done to give that income statement one look when the real story is otherwise. But free cash flow, that's the actual cash that the company has at the end of the year. And I like to see what their free cash flow is. And we see that they have 1.4 billion this year, 1.3 this year, 1.7 this year, 3.2 this year, and 2.1 this year. As a matter of fact, in 2021 and 2022, the free cash flow was higher than the net income. And the reason for that may be because they had money left over in the previous years that they carried over to the new year. In any event, when you have a company that pays dividends to its shareholders, there's two things they could do. Well, there may be a few things, but I can think of two offhand. One is that they may pay the dividend to that shareholder out of the free cash flow that they have, which is a good thing, or they may not have any free cash flow, or they want to pay a bigger dividend than the free cash flow that they have. So what do? They pay the shareholders dividends from borrowed money, which means that if they keep doing that, that dividend can't continue year after year. So I like to see where they're getting their money from to pay those dividends. And you see this line, free cash flow after dividends. So 2018, 19, 20, 21, and 22, all of those years, they paid their dividends to the shareholders and still had money left over after doing that. So if I look through this, still have to determine what happened in 2022. But T. Rowe Price looks like a very solid company. They have a 2.31 PB ratio and shares held by insiders. That means how many of their shares are owned by people who work at or are involved with the company. 2.03 seems like a small number, but it's actually a pretty decent number because that's 2.03% of 224 million shares. And what about institutions, banks, and other institutions that own their shares? 79.60%. Their dividend, I believe this is a quarterly dividend, is $1.22. But the thing that's more impressive is the dividend yield, 5.07%. So for every share that you buy, not only is the share price increasing if you buy the stock and it starts to move up, but they're paying you 5.07% return just in dividends alone. Now, management. Robert W. Sharps, I don't know what a CFA is, but he's also a CPA. He's the president, CEO, and director. He's been with the company since 1997, but he only became president in 2021, and he became CEO in January of 2022. So he just got there. So if we're looking for what happened with T. Rowe Price in 2022, it may be because the economy is doing bad and a lot of companies are struggling right now. It may be because it's under new management and he's still trying to get his bearings under himself. It may be because he's not a great manager and they may have to switch him out and get someone new in there. It's all speculative at this point, but there's things to think about. But from what I'm seeing here from the analytics, whatever the reason for the decline as of last year and this year, T. Rowe Price is a quality company with solid fundamentals. And T. Rowe Price is in the asset management industry and the financial services sector, of which BlackRock and Vanguard is at the top of that industry and the asset management. Okay, guys, please like, subscribe if you want to receive more of these videos, letting you know about timely stocks that would be an opportunity to buy and to know what the fundamentals are for those stocks. And please have a great night.